Hi, I'm Monica Breckenridge, owner of Pink Realty.
And I'm Lori Sorrels. I'm a mortgage lender.
And today we're going to talk about understanding your mortgage.
It's important when you take out a mortgage to know exactly what you're doing. What makes up your monthly payment? Principal, interest, taxes, and insurance. In all cases, you don't have to have taxes and insurance. So know what goes into yours. Are you just paying principal and interest? Or are you paying the full principal, interest, taxes, insurance? And there's another thing called mortgage insurance that you need to know about and understand how that works on the different types of loans. It's also important that you know how we came up with your loan amount. It's different how we form a conventional standard 5% down loan, or if we're doing an FHA 3.5% down, or if we're doing a VA. What goes into those? How did you come to the final loan amount? It's important that you know how we came to those so that you know what we're basing your payment on. It's important that you know what kind of interest rate you're looking at. Are you going to do an adjustable rate mortgage that might adjust down the road on you? Or are we doing a fixed rate loan? Are we doing that loan for 30-year fixed, 15-year fixed? What type of payment or structure do you have because of that? In other words, what are your payments going to be if we did a 30-year at a certain interest rate? And what are they going to be at 15 years if we do that at a certain interest rate? What are those payments going to look like for you? Know when your payments are due. They're due typically on the 1st of the month, late after the 15th.
Meaning that they can have up until like the 14th to make that payment.
Absolutely.
And it won't hit their credit.
That's correct.
Yeah.
But it won't, not just that it won't hit credit, but you won't have a late payment associated with it. After the 15th of the month, there's a little late payment associated with that. So when you send the payment in on the 16th, you would have to add that extra payment in.
And usually when you get your first loan on the house, there's a time between when you make that first payment. It's like a month later after you buy the house, or sometimes it could be like a month and a half later, depending on what time of the month you're buying the house. So that's really nice when you first buy that house that you don't have to have that first payment right away.
Immediately.
Yeah, you could use that for buying stuff for the house, stash it away for savings, but I think that's great.
That is great.
Because they actually collect that up front. Your payments are in arrears, right?
Correct. Yeah, mortgage payments are always made in arrears. So it's always important to know how that lays out. For example, we just made our December payments on December 1st, and that actually pays your November payment.
Right.
So you'll pay the January 1st, and that'll pay the December payment. So it's always paid in arrears. But that's something that sitting down with me and talking through how those payments are made is very important.
From the realtor standpoint, there are certain properties that cannot go certain types of loans, and that's where we can discuss those properties. For example, FHA and VA types of loans, the appraiser that goes out to the house, they're going to be very picky on financing. The lender's going to be very picky on financing houses, so there can't be any major issues. Cosmetic is fine, but major safety issues.
Safety and hazard issues.
Safety and hazardous issues. So some of these homes won't qualify for these types of financing. That doesn't mean you can't buy the house. It means you might have to do some repairs to the property prior to buying it to get the loan to go through. And we've had sellers and buyers do that to get the loan to go through. It is a big risk, but it's something we can definitely discuss.
But it's something typically you have to get the seller involved with so the repairs are done correctly and so forth, because typically going into the home as the buyer, it is risky to do any types of repairs in advance of owning a home.
Exactly, because that's just risking your money, you know, but I see people do it all the time.
Right, but when you're talking about understanding your mortgage with that, if you only qualify, let's just say you qualify for an FHA loan and this particular property that you like is only being offered conventional, you can't typically buy that property then because we can't get you qualified under conventional guideline. So that's important that you know how the homes are being offered and understanding your mortgage and what you can do.
And then one last thing is HOAs. Many homes in Colorado, especially the newer communities, have an HOA, which is a homeowners association. They have dues. That payment is not in your mortgage. That is separate from your mortgage. So when you are getting your mortgage estimate for your payments, make sure you look and see if it included the, usually lenders might put it on the side saying, oh, this is your HOA on top of the payment, but usually it's not going to be wrapped into your payment. So
it'll be made separately.
It's going to be made separate, so you got to make sure you can be able to afford that, and the qualification can afford that as well. So we look forward to working with you on your next home.